The Royal Bank of Canada. What comes to your mind when you think of investing in RBC? For me, it's strength, stalwart, and that it's a behemoth. It is the largest company by market capitalization on the Toronto Stock Exchange. And in this video, I'm going to talk about why I think this is such an amazing investment for investors. Before we dive in, I just have a request. If you can support this channel by subscribing so that you know exactly when my videos are uploaded. Alright, let's get into it. If you follow the markets, I'm sure you must have noticed the share price of Canadian bank stocks have dropped over the last 12 to 18 months. The question is why? Well, the main reason is because we are in a high interest rate environment. Central banks of most developed countries have been hiking interest rates to combat inflation. A byproduct of that is a shareholder sell-off of dividend-paying stocks, like RBC. But why? An investor can earn 5% return on a fixed income product with the principal being safe. That's the first reason, safety of principal. Secondly, there's a fear of recession. So customers of banks in a recession may not be able to make payment on their mortgages, lines of credits, credit cards, or any other products offered by the banks. And when this happens, the profits of the banks get hurt. To combat this possibility, the banks increase their loan loss provisions. More on this later in the video. So why invest in RBC today? Well, there are two reasons again. Number one, capital appreciation. The stock is near 52-week lows. At the time of recording, it's between $121 to $123, and it seems like it's hit a bottom at this point. There's a high likely chance that it will go up from here. But secondly, and perhaps more importantly, the dividend yield of RBC is very attractive at 4.45%. And RBC, being an aristocrat, increases this dividend on a yearly basis, usually by about 8%. So currently, by numbers, the dividend is $5.40 per share per year. If we assume an 8% increase to the dividend, that works out to about 43 cents, so total being $5.83. And again, if we assume that if you buy shares of RBC at $122, the yield would become 4.8%. Now imagine the compounding effect, because every year if RBC increases the dividend by 8%, the initial investment could be worth or could be yielding perhaps even 12 to 15% a mere 7 to 8 years down the road. So the compounding effect of such an investment is amazing. So if my advice is, if you're young, if you have time on your side, you're in your mid-20s, this is a great investment opportunity because we're at 52-week lows. There's a great upside from here. And if you decide to hold on to this investment for many years, your return on your investment will continue to increase. A concern of all bank stocks is the loan loss provisions. And what is that exactly? As I mentioned earlier, all banks reserve funds every quarter for loan loss provisions. In a high interest environment, the banks are aware that many people will not be able to pay back all or part of their loans to the bank. Some may even declare bankruptcy in an extreme situation. So to counteract this effect on their business, banks hold aside some funds to account for those possible potential losses. As an example, during the pandemic, all of the 6 major banks of Canada had a high amount of funds in the loan loss provisional program. When the pandemic ended, they returned that money into their earnings section of their financial statements, and their earnings per share increase because of it. So same thing now is what's going on. Because we're in a high interest environment, economic uncertainty is in the air. Banks are being cautious and they are putting some funds away in this loan loss provisional program, but it is temporary. When the environment improves, they will move that money back into their earnings or into their bottom line, and this will increase their EPS, which will have an effect on the stock price appreciation. That's our video for today. Please drop a comment, like, and share the video if you've enjoyed the information. I hope to provide you with a lot more valuable information in the coming videos. Thank you.